Time for the word on Wall Street. Top investors watching your money. Joining me now, Rosecliff Capital CEO, Managing Partner Mike Murphy, Managing Partner for Harris Financial Group, Jamie Cox, and Walser Wealth Management President, Rebecca Walser. Great to see all three of you this morning. Thanks for the early start. Rebecca, beginning with you, today is the first day of the third quarter, first day of the first half of the next half of the year. Stocks are coming off their worst first half start since 1970. Futures are down this morning. Your reaction to this market downturn, and do you think it's getting worse?
Yeah, Dagan, if you look at the GDP now figures out of the Fed Atlanta yesterday, they're actually showing a contraction April through June of 1%. And that would obviously be on top of Q1 contraction of 1.6%, meaning that we could officially be considered in a recession as soon as the numbers get finalized. But what I'm really interested in is the data released by the Commerce Department on Wednesday, Dagan, showed that consumer consumption basically only grew at 1.8% in Q1, where we really thought, economists thought it was going to be 2.9 to 3.2%. So what we're showing is economists are really off in their projections, and we probably are going to see a Q2 that is potentially to the negative, meaning that officially we'll be in a recession. And, I do think, Dagan, there's nothing great on the horizon. What is great? We still have inflation. We still know interest rate hikes are coming. That means bonds are going to still be depressed. We still have the food problem that's coming that Biden's telling us about, a lot of unrest in the country. So, unfortunately, I think the markets are going to have a hard road ahead with the QT tightening and the interest rate rises. That is double whammy that we're getting. The markets are going to have a tough road here.
Mike, assets in decline across the board, and look no further than crypto plunging. All major cryptocurrencies are down more than 70% since their all-time high in November. Bitcoin set for its biggest quarterly drop in more than a decade. It's currently trading below 20,000 here. Where do you see crypto going in the future? Mike, again, it's a method for gambling, and it's impossible to value, like, say, a bond or a stock. And you've never been a fan, have you?
Good morning. I think there's a use case here. It is a lot of times when we talk about the price of Bitcoin, we are speculators gambling. So as you get more and the price of Bitcoin going below 19,000, I think that's going to get even more sellers. Mm-hmm. And now we're talking regulation coming in globally, in Europe, I think regulation here in the US. So I think there's going to be more out in the overall price of crypto before it bottoms out.
Mike, just your shot's breaking up a little bit. Before I move on to Jamie, Mike, where would you put new money here?
So I think the one place you want to look is the U.S. markets. S&P 500 for people, a basket. Don't try to pick a sector. Look at S&P down 25% off highs. That's where you want to be out. That's what will recover, and you can take that to the bank.
Jamie, you answer that same question. Where are you advising people to invest right now?
Well, Dagan, thank you. I'm going to piggyback off what Mike said. I think, with all the economic uncertainty, with all the cloudiness that we see in data, there's really nowhere to hide, nowhere to seemingly invest right now. But that's actually incorrect. This is actually the time when value is created. So you've had absolute carnage in software stocks. So stocks like Shopify or Adobe, those are very good places to go to find extreme value. You can do it in any of the software stocks right now. In addition, if you're more worried about persistent inflation, pricing power is where it's at. So you have companies like Coca-Cola or United Healthcare, companies that can pass along those increased costs to consumers and be able to maintain margins. Those are the places that you should pay attention to as you're trying to make your bets for the next half. I mean, you can't find a better time. I think if you look at the put call ratios on the index, they were below 1, like 0.91, the lowest they've been in over a year. So there's probably a little bit of contrarian play here that, even though it's been carnage in the first half, there's some opportunity for investors to pick up what could be a much better second half if we get some of the data to come in where inflation is starting to break, and then the central banks don't have to raise interest rates as aggressively as they have been throughout the last couple of months.
If you think there's a rebound in the making, Jamie, are you betting that the Fed does not get as aggressive. Again, that was not this week, but the last week, investors were giddy and buying, the markets were rallying because the expectation was that the Federal Reserve was not going to raise interest rates as much as people were expecting. But you're still staring at this almost $9 trillion balance sheet that they've got to bring down. And if anything, the Federal Reserve hopefully has made it clear that people, when assets blow up, they're not going to come in and bail out crypto investors. Like, the bailout is not in the making anymore, because over and over again, rich leverage people have been bailed out by the central bank.
Well, I think it's more fiscal. I think it's more fiscal policy, Dagan. I think that's where you have it. I mean, if you look at last year, one of the precipitating factors of inflation throughout the last year has been, a lot of the excess stimulus that was, delivered by Congress and the president. So I think that is burning off. There aren't any more stimmy checks, and there's not any more of that advanced child credit coming to people, early. So the amount of money that people have to spend is waning, and the Fed is hiking into a slowdown. So, I mean, there is a limit to which they can go. So I do believe that that's what you're going to see. Even in the summary of economic projections, the Federal Reserve even shows interest rate cuts in 2024. So even they don't understand what's going to happen in the future. So I think you're going to see a lot less Fed tightening than what people predict.
But Rebecca, I heard you say amen. There are stimmy checks coming. Whether you're looking at California, Gavin Newsom is sending checks to people. Again, we need to give you money to spend to fight inflation, which, did the guy go to college? Number one. Number two, the Biden administration extended the student loan payment pause in April through August 31st. That is money that is going directly into the hands of people, to wealthy doctors and lawyers and people with advanced degrees who have six-figure paychecks. They made that decision when inflation was already running at an 8.5% annual rate, when the unemployment rate was at 3.6%. These people don't know what they're doing.
Well, I mean, the Fed chairman said as much. They don't understand inflation. And that, Dagan, was really discouraging, that we have someone who doesn't understand inflation that well. I mean, it's very basically simple. We have a certain amount of finite goods and services in the world, and money chases those finite amount of goods and services. And when you have a lot of excess capital in the markets, prices are going to go up. It's not that hard to understand. We've overstimulated the economy globally, and we have too much currency. If you look at the M1 money supply since 2020, it is off the charts. So we have got to get this under control, and we have to. The stimulus has to stop. We can't be on the hamster wheel, Dagan. This is what's causing the inflation. Come on.
Exactly. Rebecca Walser, Jamie Cox. Mike, I would have talked to you more, but your shot was breaking up, because I suspect that you're somewhere next to the ocean or a large body of water. And I envy you, sir, always. You and your amazing family. Mike, have a terrific weekend. Jamie and Rebecca, have a fabulous July 4th weekend. Much more ahead.